Personally, I strongly agree with this viewpoint. I think if we have to find a country for China's economy to benchmark against, the most representative and comparable one is Japan. The US market, due to differences in national conditions, market environment, and development level, just isn't comparable to ours. Japan is very similar because, as East Asian neighbors, we both share Confucian culture and are both Asian. From this perspective, Japan is highly relevant and serves as a valuable reference. So, I've always studied Japan in various settings, taking our neighbor as a teacher, looking at how Japan, after its so called lost 30 years, managed to be the first to emerge from a deflationary environment and a period of low growth, and how it came back from being a low desire society to where it is today. Today, we see that Japan's stock market has basically returned to its historical peak, and even real estate has climbed back to the heights seen before the bubble of the 1990s. Of course, there are some geopolitical factors at play, but at the core, after the bubble burst and with population and economic decline, Japan actually implemented a very high level fiscal and tax system reform over the past 30 years. It wasn't just about supply side structural adjustments. More importantly, Japan introduced macroprudential regulatory tools in its overall economic management. At the same time, in fact, these corrective policies have played a significant role in stabilizing and boosting economic growth. This is exactly what Professor Guo Xiaoming mentioned regarding economies like this. In Japan, when the Abe administration came to power, Abe's three arrows policy was a very representative example. They implemented large scale fiscal stimulus policies that were sustained and effective, which effectively offset the contraction in the balance sheets of the private sector and general enterprises. During a balance sheet recession, people no longer prioritize the profits of households and businesses as their guiding principle. In this kind of environment, because it's a recession, a deflationary environment, and a debt driven economy, most companies and individuals are focused on repairing their balance sheets. So, most businesses are busy paying off debt rather than expanding. At this point, the government's fiscal policy should step in to make up for the shortfall caused by the contraction of the balance sheets of the private sector, businesses, and households. This is a large scale, long term macroeconomic stimulus policy. That's why Abe's three arrows were very effective in helping the Japanese economy emerge from a deflationary and negative interest rate environment. So now we're seeing a very convincing situation. The employment rate for Japanese university graduates is 98.5%, which is basically equivalent to full employment. And now, what's happening is that university students are being recruited by major companies even before they graduate. In fact, to compete for students and secure new hires, companies are even offering signing bonuses, relocation assistance, and all sorts of incentives. So, in terms of the labor market, Japan has entered an unprecedented era of prosperity, a time of full employment that is very favorable for young people. Although there are still many people in flexible or gig jobs. What does that indicate? It means the nature and structure of employment have changed, but the employment rate remains very high. So even in a recessionary environment, Japan managed to maintain its position because Abe's three arrows, expansionary and proactive fiscal policies, effectively countered the effects of a balance sheet recession. As a result, Japan's overall GDP, per capita income, and disposable household income have all remained at peak levels. In other words, the standard of living for residents has not declined significantly. So, from this perspective, Japan's experience is actually very meaningful and offers valuable lessons for the development of China's economy and its consumer market.